Hey now, I'm back with another exclusive trading system that not only has been fully optimized, but it has also been used in live trading by yours truly. This strategy is based on Elliot Wave theory and has been modified to use modern day indicators. Just stay tuned to the end when I am going to show you a trick that can not only increase the performance of this system, but many others too. And for those of you who want to make non-traditional profits, check out my crypto landing channel, where viewers are making 5% every week on the Binance Smart Chain with Smart Bond. Just make sure to hit that subscribe button before your next trade makes you look like this guy. I call this system Ride the Fifth. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes two free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the Relative Strength Index, also known as the RSI. Inputs will be kept at default, and I'm going to uncheck all the style boxes except for the RSI itself and color it in yellow so you can see it more clearly. The RSI is one of the most popular indicators in trading and was created by J. Wells Wilder as detailed in his 1978 book entitled New Concepts in Technical Trading. This study was developed to detect overbought and oversold conditions in the market. But in Ride the Fifth, it will be used to confirm Elliot Wave counts and thus confirm entry signals. The second free TradingView indicator is the Stochastic RSI. Inputs will be kept at default, and I'm going to uncheck the middle line and make all the other graphics bolder. Most indicators are reactive to price, but the Stochastic RSI takes the standard stochastic indicator and makes it reactive to the RSI. Essentially, this study is an indicator of an indicator. This tool will tell us if the market is overbought by crossing above the 80 level and oversold if it goes below the 20 level. In Ride the Fifth, the stochastic RSI is going to detect wave 4 and confirm our entry signals. Before I show you how this system works, I want to thank my sponsor, Henko Trade, and I really want to thank them for the 100% deposit bonus. But I must let you know I was disappointed because it took 13 seconds for my free 25K to be placed into my trading account. I like my free money in less than 5 seconds. So if you're looking for a broker with no KYC, spreads down to 0, and 500 times leverage, but can put up with the inconvenience of your free money coming into your account in over 10 seconds, then Henko Trade is for you. I suspect they will have you smiling like this guy. Back to my system. As always, system rules and details are listed in the description below. Before I begin, I just want to warn you this system is somewhat subjective, but with little effort can be easily applied to any market or time frame. Additionally, if you are an Elliot Wave purist, this system is not for you. I am applying Elliot Wave principles, not the Elliot Wave rules. This chart is Euro versus the US dollar 1-hour candles. So here we're going to identify a new market sequence, a series of higher highs and higher lows. We're going to label the first move up as wave 1 and the first move down as wave 2. And everything up after that is going to be wave 3. We're going to draw a Fibonacci projection from the bottom of wave 1 to the top and then to the bottom of wave 2. We're going to see that price moves above the 1.618 level and then pulls back and takes the stochastic RSI into the oversold territory. That is going to be wave 4. We're going to confirm divergence on wave 3, a higher high on price, and a lower high on the indicator. Then we're going to see that price goes past the 236 level, but does not go past the 0.5 level. We get a cross up of the stochastic RSI, and this is our trigger candle. We open a position at the candle close, with a tight stop at the 0.5 level. Then we are going to draw a Fibonacci projection of the first wave and project it to the bottom of the fourth wave. We are going to set our profit target at the 1-to-1 projection of wave 1 for a 5.43 risk versus reward. And we can see example 1 crushes the profit target. The first thing to do is identify a new sequence, a series of higher highs and higher lows. Then we are going to label the waves. The first wave up is wave 1. The first move down is wave 2. Then we're going to draw a Fibonacci extension from the bottom of wave 1 to the top and project it from the bottom of wave 2. Then we're waiting for price to break the 1.618 level, which it does, and then we are looking for a pullback which brings the stochastic RSI into the oversold area. Then we're going to label this as wave 3 and this as wave 4. We want to confirm there is regular divergence at the top of wave 3, so we can see a higher high on price and a lower high on the RSI. Then we're going to draw a Fibonacci retracement from the bottom of wave 2 to the top of the structure. And we're looking for price to hit the 0.236 level, and if it goes past the halfway point at 0.5, the setup is canceled. The next thing to look for is a cross up of the stochastic RSI, which we have right here. We draw a Fibonacci retracement from the bottom of wave 2 to the top. This is our trigger candle. We open a position at the close of this candle with our stop at the 0.5 level. We get rid of the retracement, and we are going to create a Fibonacci projection from the bottom of wave 1 to the top and project it from the bottom of wave 4. And we are going for the 1-to-1 projection. So we are going to set our profit target at the 1 level. And this gives us a 1-to-1 risk versus reward. And long example 2 crushes the profit target. Now we flip to shorts. The rules to enter a short on Ride the Fifth are: first, identify a bearish sequence, as signified by lower lows on price and lower highs. Then identify the waves. The first wave down is wave 1. The first pullback is wave 2. And everything down after that is considered wave 3. Then we are going to draw a projection from the top of wave 1 to the bottom and project it from the top of wave 2. We are looking for price to cross the 1.618 level with a regular bearish divergence, so we can see a higher low on the RSI and a lower low on price. This pullback takes the stochastic into the overbought territory, so this is identified as wave 4. We then draw a Fibonacci retracement from the top of wave 2 to the bottom of wave 3 and make sure price pulls back into at least the 0.236 level, which it does. Then we are looking for a cross down of the stochastic RSI, which we get, which makes this our trigger candle. We open a short position on this candle and place our stop at the 0.5 Fibonacci retracement level. We then take our Fibonacci projection tool from the top of wave 1 to the bottom and project it to the top of wave 4. And we set our profit target at the 1-to-1 projection of wave 1, which gives us a 1.55 risk to reward ratio. And short example 1 crushes the profit target. I'm going to show you one more short example. First thing we're looking for is to identify a new bearish sequence as signified by lower lows on price and lower highs. We're going to label the first wave down as 1, the first pullback as 2, and everything after that as wave 3. We're going to draw a Fibonacci projection from the top of wave 1 to the bottom to the top of wave 2. Then we are looking for price to cross the 1.618 level with divergence. Here we can see a lower low on price and a higher low on the indicator. This pullback takes the stochastic RSI into the overbought territory, and we identify this as wave 4. Then we draw a Fibonacci retracement from the top of wave 2 to the bottom of the structure and confirm that price did indeed go past the 236 level, but did not go past the 0.5 level. The first cross down of the RSI is our entry signal. This is our trigger candle. We open a position at the close of this candle with our stop at the 0.5 level. We then draw a Fibonacci extension from the top of wave 1 to the bottom and project it to the top of wave 4. We then set our profit target at the 1-to-1 projection of wave 1 for a 1.75 risk versus reward. And short example 2 hits the profit target. Due to the subjectivity of the system, I am not going to backtest it 100 times per usual. I think the results will be too misleading. However, if you want to know the results I experienced when trading this on the live FX market, you can ask me in the community. Remember, membership is free. I give this system a Trader's Landing score of 9 because it ensures you are going with the current trend, features principles of the Elliot Wave theory as adapted to current markets dominated by algorithms, but is subjective and needs to be fully tested to understand all of the nuances. Remember, the enemy of great is good. I have 6 advanced tips on how to use this system. First, there is a little trick you can do with the stochastic RSI. When the %K line shown here in blue is ahead of the %D line, either straight up or straight down, the market usually continues in that direction. If you look for that clue on the higher time frame and execute on the lower time frame, you will increase your win rate. Second, if you go down in time frame specifically for wave 4, oftentimes there will be a 1-to-1 ABC pattern before going back in the direction of a trend. This can give you an edge for better entries. Some other suggestions to consider in your testing are confirming trend continuation with volume, trading in the direction of the higher time frame trend, and looking for candlestick patterns to snipe entries before a stochastic entry signal. Speaking of powerful signals, when the stochastic RSI stays at the extreme level during an impulsive move, this is called a snake. After that, look for a quick pullback and a sweet and easy entry. Fifth, and this is an ode to classical Elliot Wave. When wave 2 retraces at least 50% of wave 1, the projection of wave 5 will be more accurate. Using the 50% retrace is a great way to confirm your wave count. Furthermore, when looking at structure of wave 3, impulsive is better than choppy. When you see a very impulsive wave 3, sometimes it is best to place a trailing stop to capture maximum profits from wave 5. Other times, you can get an entirely new 5-wave move in your direction. Those trades can make your entire month. If you want to talk to me and interact with our community, in addition to supporting the work I am doing here, you can do so for free by registering for our Circle community. And those who pick up a premium or elite membership will have access to the discussion and education spaces, in addition to the TradingView automated scripts and a private video on my own personal trading system. Thanks for watching and have a great day, because you deserve it.